Morris on my little crypto channel, and you're here learning about how to trade crypto and make some money. So what I've got here today is I've got a line, an amazing vertical line from the last video. I figured I'd start to do that so we can see what happened since my last commentary. So let's put it on something we can see. We've got an hourly chart here, and my last commentary ended on this vertical line. So let's just do a recap. What I always do whenever I look at the market, and this is something key to realize, is that whenever I'm analyzing the market, I always start on the weekly. Even if I've done it 20 times that week, it doesn't matter. So on the weekly, we've got this big market structure M, and we're coming up against this line here, and what usually happens in a downtrending market is that you have a confirmation and then it breaks below. To invalidate this M, we'd have to put in a W right here. Okay, so we'd have to break above here. This W would invalidate this M. Or what it would do is it would basically say the M is on pause right now and we have further upside until we put in a market structure M maybe up here, and then it comes down again. Okay, but you always wait for market structure. So let me go back. So yes, it wasn't yesterday's video, it was a couple of days ago, I think. I broke down a few possible scenarios. So again, weekly I still believe is down until we break up and put in a W. We're still playing this massive M. So that's it for the weekly. You don't want to go too much on the weekly. Again, just another commentary on the weekly. When you see people saying that, oh, we've hit 61.8 or we've hit 61.8, that's bullish. Essentially, it's a bullish reload zone, which means that you look for market structure inside of this zone. So if I see a W in this zone, that's very bullish. However, if I see a W in this zone, not necessarily bullish. It could be some harmonic fractal, could be something else, and it could come straight down. So that's when you have to be careful of W's. But W's in bullish reload zones, that's what you want to look for. But the actual reload zone on its own is only number one reason for taking a trade. You still need divergence, and you still need market structure. So looking at the MACD, we do have divergence down here. Let me draw a little trend line to make it clear. We have a clear divergence here, which is confirmed on this week. When this week closes, this will be a confirmed bullish divergence. So that's a really good sign. And you can see that low to that low is in divergence to those lows. So the price made a lower low, came into reload zone, and MACD put in a bullish divergence. So we are looking for the price to go up. Okay, now that is all true, but it's not confirmed until we get a nice market structure W here. So until we break above the sort of 7,700 level, and you can drill down to the lower time frames to see exactly, but until you get that market structure, I say we're still in a downtrend, we can still go lower. So let's look at the hourly and we'll see where we closed off. Now, in the last video, I talked about the dangers of trading with M's that haven't confirmed yet. Okay, so I believe it was there was an M here or something like that. No, there was an M here. It was somewhere around this time, 10 a.m., 10:30, where I saw this M and it wasn't validated. Okay, now there's M's coming in here, but they're immediately being rejected. So it doesn't have any follow through and then coming to test, which is the sign that it's actually working, and there's no follow through. And if you look on the let me just take these drawing charts away. Don't want to move too much after you draw, otherwise you'll never be able to remove your drawing tools. So looking on the hourly, just after where we took off, I said you have to be really careful trading in reload zones when you haven't got a market structure yet. So we looked at this one. So we're in a reload short zone in this range here. So again, we're in a reload short zone within a reload short zone. So we're coming up against some really good reload short zones where, you know, this sorts of areas it is where you want to go short. But until you get that market structure or that divergence confirmed, then nothing can happen. Okay, so on the 15-minute, let's just look at the 15 minutes, possibly the lowest time frame I would go for. What we had here is on the 15-minute we had a divergence, which is what I think I looked at before, and it had confirmed with this massive dump here. But on the higher time frames that didn't exist, and on OBV the on-balance volume was going up, so it didn't look right. It didn't feel right that it would happen so soon, and of course we just came back, we blasted out all those stops up there. So again, this is another reason why having a stop is so important. So what I'm going to do is I'm going to put on a short position. I'm not going to put it on, I'm going to show you what it looks like. Let's say you saw this M right here and you decided, right, I've got my risk window, I'm going to risk to the top of here, to the top, and I'm going to say that it's going to come down to a 50% retracement. Okay, so let's say you would put on this trade, and this is the power of risk management. Okay, so you've got a 50% retracement, got a 2-to-1 risk reward, so arguably that's an okay trade because you've got an M in market structure, it's come up to test that price, you've got divergences coming on RSI and MACD. So just to draw the divergences here for you, you've got price made a lower low, MACD made a lower low and confirmed by breaking down below here, and price made a higher high. Okay, so this was technically an okay trade. RSI also broke down here. So again, I wouldn't be upset to take this trade. Okay, I'd be happy with this trade. Even though market structure is not great and it's only on a 15-minute, if you're a shark trader and you're doing a day trade, this is an okay trade to take. But what happened? So what happened was clearly the price came and blasted out your stop. So right here, you should have been stopped out if you had a stop in place. Now, if you didn't have a stop in place, then it may have come up here and you may have thought, oh, what's going on? It's going to go crazy. And then it came back down and you're thinking, oh, phew, it's great. Now, you may have gotten out here, or you may have thought, I don't have a stop yet. Maybe this trade is still good, and it comes back down. Again, if you don't have a stop in place, your brain doesn't know what it's doing. So what happens is, the trade put in more market structure here. So you got another little M here maybe, and it came down here, and you're thinking, woohoo, I'm great, I'm in this trade still, even though it broke my stop, I'm still good. And then douche, and then if you still didn't have a stop, now you're in the minus. So you can see the dangers of not having a stop in place. So you always want to have a stop in place. So let's assume you had a stop in place, and now the trade is up here, so you're safely out. You've only made a tiny amount of loss, and you've learnt a small lesson about looking on higher time frames. So what does the higher time frames looks like? And this is where I do like to look for my actual trades, on the 4-hour and the 1-hour. So you can see on the higher time frames, this market structure I was talking about, this big M here, is nothing more than a consolidation and a small little dump down. It's really barely anything. It doesn't even touch 38.2, which is the first stop target. It just literally didn't go anywhere. So on the 1-hour, it's barely gone anywhere. On the 4-hour, it's nothing. It's just a single bar. So you can't trade off of that. Now, if we look at what's happening right now on the 4-hour, what we've got is a higher high in price. We've got a lower low in volume. Let's see if MACD is also making a lower low. And what we've got here is a MACD divergence, which on this bar right here, you can see it's below this bar, which is the midpoint. This is the left point, the midpoint, the right point, and this is where it breaks below. So this has to confirm. So I think we got some time now to confirm that before we move on to the next one, 8 p.m. So we've got another few hours to confirm this bar. So it's not even confirmed yet. Okay, so divergence is unconfirmed. You've also got RSI, which is not putting in any sorts of divergences here. it's just making higher highs, and OBV is also making higher highs. So again, I still don't trust this divergence, even though it's within a reload zone. Now, you could choose to trade on a smaller amount if you've only got MACD and you don't have RSI, you don't have OBV, and if you have all three, and you've got market structure and everything, you can trade with a higher amount. It's all about percentages and risk. So when you have an okay looking trade, you trade with a little bit, maybe 0.1%. When you have a good trade, you trade with, maybe 1%. And when you have an incredible trade and it's already going in your direction and you're already maybe in a winning trade, then you can add up to 5% of your capital, but never more than 5% on a single idea. That's just basic risk management, okay? But for this trade right here, we've got a sort of divergence coming in, and what I'm looking for now is this to become market structure, right? So this to become a nice M top. That confirms my market structure. The MACD would confirm. I'd wait for a retest of this point here and then a dump down to 50% or something. So what that would look like in terms of a trade, that would be me entering here. My stop would be above this M right here, and my target would be down here. So let's see, is that a 2-to-1? Just about a 2-to-1. Let's see if the target is in the right place. So even then, the target would be 50%. So it's a 1.65 to 1. So even then, not such a great trade. So I don't even like the look of that trade. So there is potential more upside here in what we would call a continuation pattern. So let's talk a little bit about continuation patterns, because when your trades don't come in, there's a possibility that there are continuation patterns. So let's go down to the 1 hour just to break down a little continuation pattern setup. So in this continuation pattern, it's called an ABCD pattern, and you look at the first move over here, or this could end up even being the first move, but let's for the moment look for this first move. You know what, I'm going to draw it the way I have it set up. So from here to here, and this is called the bot. So if you want to learn more about this, head over to The Rational Investor with Brian Beamish. Check him out. So this is the bot. So let's say it's... Oh, I lost it. I lost my bot. Okay, I lost my body. Okay, so we got up to here. Let's say here, this was the move, and then we had a down move. Now, that doesn't really count because it has to come between 33 and 66. So maybe it's here. Again, maybe this isn't a great example, but what would happen here is, let's assume it was here, and this trade comes down and comes down to here, and then it puts in some shapes here, and it puts in a nice W. What we can do then is we can take this fib here, and we can clone it. It's hard to select this because I've got multiple fibs on top of each other. Okay, so we clone this, we put it from here to here, and then we say the bot 2. And the 25 level is your entry level. So this is your entry level, and this sets up a long trade. The bot works both ways, by the way, so you can have a short bot as well. So you have a long trade, which is usually a 3-to-1. Bot trades are 3-to-1 because you're from down here, so you're risking a quarter and you're gaining 3/4, so it's a 3-to-1. That's generally how they work. So if this sort of setup comes in, it would come into 33 to 66. So you could see the brown 33 and the red 66. It comes between there, and then it sets up a W. If you want, you can wait for multiple W's, so a W there, and then another W, and then when it breaks the third W, so we got W here, W here, W here, when it breaks that third W on a retest, that's where you get in. So when it breaks the third W, you set your orders, you wait for it to come back down, and then it shoots off. So that's generally how the bot works. So what I'm going to do is, you can screenshot this if you want, but I'll delete this right now. So this is a continuation pattern. It happens in bull markets, it happens in bear markets, it happens all the time, and it's just about whether it comes in. And this is the difference between trading these ranges or trading something that's trending. So on a higher time frame, how this would look on a higher time frame is, let's even look at a little bit higher time frame. Let's look at the daily. You've got this massive potential, and I say potential, let's remove all of this. Massive potential head and shoulders pattern, right? And a head and shoulders pattern, so you saw that head and shoulders pattern. A head and shoulders pattern generally let me draw the head and shoulders properly. Where is that head and shoulders? Okay, so let's draw it from up here. That's the left shoulder. We've got the head over here, and then the right shoulder, and then that's your head and shoulders. So it's a bit skewed, and this is why I don't like it. The best head and shoulders are really clean ones, like with a flat neck. Even better if it's like very centered, but this is a little bit skewed. But what generally happens is that the distance from this level to this level, you just clone it and you put it up from here to here. So the distance would be to here. So that sets us a target around 9,000. Now you may be thinking, well, that's a bit crazy. 9,000 is quite an extreme level if we're in a downtrend. And I'll give you a few examples as to why this might be true, and I'll show you an example of a bot setup as well. Okay, so let's talk a little bit about this. If we put a fib retracement from here to here, RC black and white, we've got a level up here, which is also a bearish reload zone. Okay. We've also got, if you enjoy the market structure talk, you've got a market structure M here. Now again, if you're having trouble looking at market structure M's, then what I suggest you do if you're a beginning trader, stick it on a line chart and you can see them much easier. So you can see this M here, down, up, down, retest. So it retested and then doink. So that's a clear working market structure M. And if you look at where this bottom lines up, this bottom lines up perfectly with this sweet spot of 70.02. Not perfectly, it's right between 61.8 and 70.02, so it's the golden pocket. This is the 61.8 is the golden retracement, golden fib level, whatever it's called. And you can see this level here now, the head and shoulders target was right here up into this pocket. So the head and shoulders target is not too out of this world. You have this head and shoulders pattern, it comes up to right here according to the candlestick chart. So that is not completely out of this world. So what I'm going to show you now is how the bot lines up with this. Okay, let's put it on the 1 hour so you can see the bot. Now remember the bot rules. Who remembers the bot rules? If you don't, I'm going to remind you. These are the bot rules. So let's show the bot rules right here. We've got a move from the bottom to the top. We stick on bot number 1, and remember it has to come down between 33 and 66. So it's come down between 33 and 66. It's right here on 66, so close. So we can clone this, we can put this right here, and we can change this to the bot 2 level. Now your entry is right here down at the 25 level. So what can happen here? A mixture of things. It can come down, put in W here, it can break this 25 level and put in W underneath it, as long as it doesn't break this level down here. If it breaks this level, then the bot is invalidated. 1, because it went past 66, and 2, because it went past the low. Okay, so those are reasons how a bot can be invalidated. But let's assume this bot is currently in play. We've got a target at around 8,100. So it's not quite this 9,000 level, But what generally happens in these markets, because Bitcoin is crazy, is it goes up to these levels, and then everyone's like, I gotta get in, and then a massive push back up, and then a dump straight back down. And you'd be surprised how often this happens. It's just absolutely nuts. So there's the case for the bullish bot, and even if you had a little dump here, it would still be okay to set it up. Now, what you may be noticing is a little mini head and shoulders right here as well. Doosh, doosh, doosh. And then right here, if that comes down to the 25 level or breaks just below it, then that would set up a head and shoulders there as well. And that would basically be the bot target, right? Again, it would be from here to here, and then you would just take that target up to here, so it's around that same level. So 8100 is not it would not be a shocking level in anyone's book. It wouldn't surprise me in the slightest. However, since that 25 level is down around here, we could easily have this play out where we have this divergence come in. Again, this divergence is not confirmed yet. As you can see, on the 4 hour, it's barely even visible. On the 1 hour, it's unconfirmed because we would need to break this level right here. So even on the 1 hour, it's not confirmed. So nothing's confirmed. We don't have market structure yet. A market structure top would be down, up, breakout, and it would break here, then retest for your position, and then ride this position down here. But like I said before, it's not a 50% retracement, so it's not a very good target. So again, it just doesn't look good. And right now, it looks like things are pointing up in the short term. I mean, if you just look at where 38.2 is, which is the first stop, even the 38.2 is just an extension of the bot level, like right here. If you imagine this bot going up here, it's just very much looking uppy right now, right? Even if it just came down a little bit and came back up, it's still barely touching 38.2. It would have to be like this sort of thing. So I'd be very, very careful taking shorts here when 38.2 is just screaming, come and test me, come and test me. I'm here to test. So that's really, really important to think about. We've got a lot of levels up here to explore. There's potentially up into the 9,000s to come and test this market structure M here. But with all that, it depends on what the chart ends up telling you. On the CME, which stopped trading like around 7,300, when it opens up again and we're up here at 400, or where is it, 400, then we've got a little gap on the chart. So it would surprise me if they came down, filled up that gap, and then explored higher to take us into those 38.2s, as the CME loves to make gaps on the weekend. As you can see, last weekend, gap filled. The weekend before, gap filled. Here we had a gap filled, and they just love to do this gap fill with a massive spike, but it didn't really fill it, filled it up here, and they just keep doing this, right? So there's a gap, and then comes down, and then fills, and they just keep doing this again and again, gap, fill. So I won't hammer this horse home, but what we could very easily see is a gap being produced here, then they fill it. Oh, sorry, the gap being produced here, it starts out, they fill it, and then they consolidate, and then they take it up to 38.2. But again, it really depends on what the market actually tells you. So if the market is telling you there's a bearish divergence, it's crossed bearishly, we've got RSI, we crossed bearishly, market structure crossed bearishly, then I'd be happy to take some shorts down to sort of these levels, down to these 50% levels, where we got a 2-to-1 risk reward, and that takes us into the bullish bot location, where again we wouldn't be taking longs, but we'd be hunting for W's in a bullish bot location. So it's very key. And we just have to see what the market does. So at the minute, I'm going to pause my analysis right there. I've given you some ideas about what to look for, maybe moving ahead looking up, and what to look for looking ahead looking down. But right now, we're sort of in no man's land. So if you want to trade, make sure you use stops, because the market can do any old thing in this area. Remember, if you look at the daily, and you just look at where we are from this high here, you can see 38.2 is right around that 9,000 level. So even testing the 38.2 on this massive range and then coming back down, assuming this is a bear market we're still in, a 38.2 test is a normal test in a bear market, and then it comes back down, that would be 9,200. So again, don't be so surprised. And you can see how small that little trade right there is. That's what the definition of a day trade is, a tiny little trade. And we'll talk about maybe how to make profits on such tiny trades later using leverage, and how to stay safe, of course. But you can see the 38.2 is right around here on the higher time frames, and it just wouldn't. It would still be a bear market. It would still make sense to come and test this up here. However, anything can happen, and we could just keep working our way lower. If we never confirm this, head and shoulders, if we flounder and we come down, that's an unconfirmed, or let me draw it better. Right, so we make the second shoulder here, that's where we're at right now. And if we don't break this level, and we just come and we don't break this level here, or we come and test this level and we come back down and we put in a horrible M, then that could be really bearish and we could come down and keep going. So be really, really careful trading positions before they've come in. This head and shoulders has not come in, and as you can see, there is a bearish head and shoulders in play still. So that's really, really dangerous. Bearish head and shoulders here. Right, and that's currently attempting to be broken. It would have to break this neckline in order to be broken. So when it breaks that neckline, you can see it puts in a market structure W, and that would invalidate this whole thesis. So if we come up here and we break that out, then that would invalidate the thesis. So again, we're really in no man's land here. We could come up and explore these 92 levels, 8100. We could come down and test the bottom of this range. We could range in here for a while, just going up and down and up and down and up and down and ranging in this while, getting all the people long or short just to see what happens, until finally we make a big dump, retest and dump, or we come up, retest and come up. So really, since you're in no man's land, be really, really careful with taking trades. I wouldn't be an investor here. I wouldn't be a mad shorter here. Taking day trades with small setups is key. And maybe I'll make another video about how you can take small day trades and make some profit doing that as well, whether the price is going up or down. So that's it for this video. Let me switch back to the 15-minute. Just so we can see what's happening. You see the high was almost broken again. We're just all over the place here. So thank you so much for watching. If you like videos like this, then feel free to hit that subscribe button right over there. Yes, and that's the subscribe. If you subscribe, then I'll keep on doing these analysis videos. And I'm always brutally honest with where I trade, whether I made a loss or a win, where I think the market is going, or if I think the market is going nowhere. Right now I think the market's going nowhere. I think we're just ranging, but obviously some people just want to trade. So that's a few ideas for trading for you today. Make sure you manage your risk, keep your stops in place, and trade safely so you can come back another day and be happy with your trading life. So thank you so much for watching. Take care and have an awesome day.